Thanks very much, Eddie. I've come here today to tell you about my new business, but also just ask a question. Are we getting it right? But before I dive in there, I just want to sort of ask what the mix of people here is. So everyone that works in finance and insurance, can you just raise your hand? Anyone that's an entrepreneur? So that's a really interesting mix, right? And it sort of says something about the market. And it sort of says something about the entrepreneurial market that we're in at the moment. But it also says something about insurance, doesn't it? I find insurance inward looking. When you go down to Leadenhall, you go down to Lloyd's, you see a lot of insurance people talking to another insurance person about insurance stuff that no one really understands. And the consumers kind of don't get it. And I sort of sat there listening to the intro, and they were talking about, big data and gaps in the market where we could kind of sell a bit more insurance. And it's not that I disagree. I just sort of ask, what are you trying to optimize? Are you trying to optimize your capital, your invested capital as an incumbent, or are you trying to do it better for the customer? Let's dive in to why do people hate motor insurance? It's interesting, it's a mix. Let me tell you why I think people hate motor insurance. It's the product. It sucks. No one understands it. You go in there and there's a fundamental difference between what the person behind the counter knows to what you as a consumer knows. And both sides know it. It's an information asymmetry. It is as old as time. Insurers use language that is imperceptible to the common man. They use exclusions. And to jump off motor insurance for 1 second and sort of talk about travel insurance, a really good one is what's the key exclusion out of travel insurance? iPhones. What's the number one thing lost on holidays? iPhones. Guess why they excluded it? It kind of detracts from the product somewhat, doesn't it? And I was talking to a chap just before we started about who he is covered by. So he said Admiral, which lots of people do. And I asked him about had he ever had a claim. And he said yes, and they had paid out. And I told him about the reputation that Admiral has in the market, which they're actually quite proud of. And that is, when a claim comes in, they negotiate it. It's your insurance company, you've made a claim, you've paid all your premiums, and they come in and they negotiate with you. A good example of that was a friend of mine, his house flooded. The flood ruined the carpet of his lower story, and he made a claim, put the claim in, and the claim adjuster came around and sort of said, well, did you have sandbags in front of your house? And he said, I'm not sure I was required to do that. And the claims adjuster said, well, if we took this to court, I think there's a term in there that says reasonable endeavours. And the claims adjuster said, I think if you knew a flood was coming, I think it's reasonable to ask you to put sandbags in front of your house. And therefore, you had a part to play in this. I'll offer you 60%. And the guy is standing there, ankle deep in water. What are you to do? Are you to go to legal battle with your own insurance company? Is that fair? Is that right? But the insurance companies know that it's only a really small proportion of people that this happens with, so they can kind of burn these people. They're kind of happy to do it. Who knows who this guy is? Has anyone heard about the Russian guy that changed his own T's and C's in a credit card? Let me tell you the story for those that aren't nodding. Dmitry Argakov, I hope I got that right, received a letter in the mail. One of those letters, we've all received them, hopefully, that says that you're available, or you have a credit card available to you if you apply, with the T's and C's. So what he did, he scanned that and he changed the document and he changed the terms. And he said the term was 0% with no limit and absolutely no fees ever. And then if the bank doesn't actually, I guess, accept that contract, then it will be penalised. And I think it was penalised 3 million rubles, which is sort of circa 50 grand, and 6 million if they ever cancelled the contract. And so he sent that back, signed it, sent it back, and Tinker signed it, sent him the card, and sent him his contract back. He then operated that card for 2 years and slowly accumulated all these interest and fees. And then Tinker, at a point about 2.5 years, cut it off and took him to court. And the court ruled in Dimitri's favour. And what they said, which was really nice, what they said was, didn't you just do what all your customers do? You didn't read the contract. And they were, and you know, it was kind of a Russian oligarch who owns this thing, and he said it was, you know, fraud and stealing, and he got up on his high horse. But, you know, banks, insurance companies do it to us every day. So I just wanted to talk about quality. Quality is the standard of something as measured against something else. And the reason why I bring this up is I wonder how the insurance industry thinks of themselves, thinks of their products. I think incumbent number 1 measures themselves against incumbent number 2, measures themselves against incumbent number 3, and, you know, newcomer number 1. But does the customer think about it that way? I'm not sure the customer thinks when they go in to buy insurance, well, you know, I was happy at Admiral, I'll be happy at Direct Line. They don't. They think, I came from the supermarket, I was at Tesco, and now I'm going to, you know, buy some insurance, and then, you know, I'm off to buy, you know, something that really sets standard. Everything, everywhere, is now an expectation of ridiculous quality. Apple has been using a luxury brand strategy now for at least 5 years. Every startup every startup that's got traction in the consumer sphere is now taking luxury brand strategies and applying them in a really low cost way by using technology. Therefore, it is baked into the consumer consciousness that they expect a certain amount of quality. And if they don't, they're going to leave. So the question is, what do we do? What I wanted to do here was really challenge what everyone thinks inside the insurance industry and try and connect the consumers with the industry and the thought. Because I don't think that marginal incremental innovation is going to cut it here. I don't think adding another aggregator or, you know, sort of turning another dial or another knob is going to cut it. We've got to change the product. The product hasn't been changed for as long as I know. We've changed upstream, we've changed downstream, we've thought about different distribution channels, we've thought about this, we've thought about that. People ask me incessantly, does social media convert to sell insurance? And I say, normal insurance? No way. What social media does is it just drives people towards the truth. It's like a big truth-finding machine. And I think what you'll find in insurance is the truth is pretty ugly. Therefore, no one is going to buy insurance on social media. Well, unless they have to. So what have you got to do? You've got to change the product. What to? I have no idea. I'm trying something I suggest everybody else does. But I don't see that many people trying. And the reason people aren't trying is because of regulation. Regulation and fixed costs. There's a way around both of those things. and that is the regulation is in place to protect people. And realistically, all I'm doing here is championing for the customer. So you can traverse that. But the second point is I guess, risk. There's a huge fixed cost that you need to mitigate. But there are people willing to work with you. There are people that are doing these things. And there's lots and lots and lots of interest. But it's still scary. My business is still, sort of somewhat flying under the radar. And we're doing that for a reason. We're doing that to make sure that we've got enough truth behind what we're saying before we launch out into the public consciousness. The Daily Mail is always a factor. So I just want to sum up and sort of say, I don't think we're talking about the right problem. I think the right problem is putting yourself in the customer's shoes and thinking, what the hell do they need? Not what do you need? Because you're the problem. The customer is the solution. Anyway, thank you. Okay, sure.
Okay, can we take some questions for Kim? Kim, could you just explain this business model that you've set up in a bit more detail so that we can understand what you're talking about?
Short answer, no. Look, the business model is what we call social insurance or peer-to-peer. It takes a lot of the learning from the peer-to-peer credit industry and applies it. But, the way that we think about it is just disintermediation. Insurance is a market-making business. But the internet is a market-making machine. And it will do it cheaper, better, more scalable, and it will be infinitely more reliable in the future. Every other market-making business has, sort of had pressure, whether it's electronic trading or what have you. Insurance just hasn't felt that hit yet.
So why are you keeping it under the radar at the moment? What are you building models to see whether they're appropriate for the consumer market?
I think we're building and testing models in real life. But we're also having conversations with regulators. We want to play fair. There's other people that are telling us to create a shadow insurance market where people just come together and kind of pull capital. We don't believe that. We think we're on the right side of the law here, and therefore we're willing to kind of have that negotiation and have that conversation. But the other thing here is it's a consumer business, but it's a finance business. It's slow, it's long, we're changing opinions, and we don't want to jar anyone. It will be costly if we lose trust. So it's the long term, not the short.
Thanks.
Hi, Dean from AXA. Are you backed by a big company, or are you genuinely a small company backed by yourself and other like-minded individuals?
Proudly the latter. We've had many conversations with large insurers, AXA included. We think we're a different proposition, and our business model doesn't necessarily fit with the incumbents. But that's a story to play out.
Hi, Nick Wasman of Proof Protect. I was just wondering parallels between the peer-to-peer insurance and, I guess, the slightly more developed peer-to-peer lending. So are you finding that the early adopters, customers, well, whichever end of the market, tend to be people which have been in peer-to-peer lending? And also from the regulatory conversations you've had, I guess the regulators, they're treating peer-to-peer insurance differently than they did the peer-to-pear lending at the most earliest days. What have you found?
Let me tackle your first question first. Who are our early adopters? We've got a couple of different buckets. The peer-to-peer lending crowds have somewhat transferred. Their consciousness has been raised to this kind of concept. But I think in that group, that is a subset of what we call a bigger group, which is collaborative consumption. And if you think about the sort of people that would use peer-to-peer lending, generally have, at least one side of the market has excess capital. We're finding people that we're finding that our proposition really resonates with the, sort of 29 to 39 market. And it's those people that have been really harshly dealt with in their, sort of recent memory. And they still hold on to that, kind of bitterness. But it's also developed with what we call this kind of informed consumer angle. There's a general belief out in the market that customers don't want to know about insurance. But we're finding, especially a very strong subset of those customers in that market, that's just not true. And what was the second question again?
On a regulatory side.
As
far as how they're treating you compared, when peer-to-peer lending came out, they didn't give a damn. They do now, and I assume because of that, you don't have as much of a window where you don't get a knock on the door. What's going on?
Yeah. I think that's right. We have done everything. We've done everything within our means to play nice with the regulator. And that means going to the ends of the earth to make sure that our model doesn't put people at risk. And I think that's a really key point. You've got to think about what the FCA is there for. They don't care that you're a new technology. They don't care about, how you're going to distribute or anything like that. They care whether or not you're going to be a net positive for the consumer and what that risk profile looks like. So we've done a lot of work demonstrating that we've thought about this. Does that mean that... I was
going to say, do they care about that work? Or
They do. They genuinely do. But likewise, there's a long way to go. Would we be able to be a huge consumer proposition in 6 months? No, I think we'd kind of be held back. But, it sort of works.
Hi, Julian Smith, independent funding expert. I totally get what you say about the importance of trust when it comes to any sort of new financial business and what you're trying to do with the regulator. Just contrasting again with the peer-to-peer lending market, there's a certain amount of capital that a provider is giving, which is a finite amount of capital, and based on the models that they can borrow from the banks, they can work out for a given credit profile what the risk of losing some of that is, or all of it, etc. With insurance, it's a little bit different, and the question is, how do you address the contingent capital liability for people who might be providing capital? Because you talked about the fixed costs, which I understand, but you haven't really talked about the capital side of the equation and where that sort of comes in from the crowd. So I just wondered if you could sort of give us a sense for your thinking there.
Let me start off by being brutally honest. This is the hardest part of this business, and it's the part that we've probably done the most thinking on in the market. There are other players out there trying to do similar things. My background is in private equity. My co-founder's background is in infrastructure financing. And I guess this is where we've innovated. Unfortunately, that's where I'm going to stop that explanation, because I think that's a little bit of our special sauce. But you're thinking about it the right way. It's there's 2 or 3 options that you can kind of take with this, and all of those 3 options will be pursued in the future. They're all relatively robust. There's no secret formula here, apart from us knowing it before a couple of other people. The reality, if you think about it on an aggregated basis, is it looks awfully lot like a vanilla insurance book. And I think that's the point that you take away.
Thanks. Kim, thank you very much.